we're definitely get some more people getting tuned in.
Yes,
A lot of sauce trade dropping, brother. Even slaying these markets, bro, up and down.
Yeah, this last 2 weeks would be great. Last week I could lock in profit 1,500 points, and the week before 1,200 points, so 1,280 points, so almost 2,080 points, 800 points in 2 weeks. So that was great. I mean, I
Incredible.
wasn't
Absolutely.
expecting some levels like this, some numbers like that, but was good.
That's
Thanks.
amazing, my brother. You're an absolute monster. Going up and down, literally, Daniel. Up and down. All right. Shout out to everyone that said anything in the chat. Shout out Globex. You know, Cali. I think I said that correct. BT. Shout out
Shout out,
Deshaun,
it's
Ambo,
Liam. Go, yeah,
Slim, Colin. Much love to you, Colin. We'll talk soon, brother. Don't.
Alex,
Nothing's
Anthony.
wrong,
Yeah,
brother. Yeah, yeah.
a lot of people here. Great.
Alex, Daniel, Preston, Gia. What's going on? Magic, Rap, Adrian.
Adrian. Yeah.
Hello, hello, hello to everybody. If everybody's not familiar, again, Raphael is a 2 Degrees analyst, absolutely killing it day in, day out. His process has been explained of how he views the markets and multiple live streams. Those are recording and already up on the 2 Degrees database. There's been a couple that haven't been recording just by the sheer nature of just technology errors. So, just want everybody to be cognizant and patient of that. We can't control every single live stream. So, just be mindful of that. So, Anthony, what up? Hope all is well. We're gonna get started in just a little bit. I know it's just 1 o'clock right now, but I guess if anybody has any like preliminary questions, and we'll start in probably like the next like 2 or 3 minutes. Do want to like make sure that Raphael, you got your recording in check, and
Yes.
everyone's
Yes.
aware of that it will be recorded on your end.
Yes. 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 All good. Let's wait like a
Awesome.
couple minutes more, and then we start. Let's to see if some people is still coming, and then we can start.
Awesome, awesome. Does anyone have any like preliminary questions for
Yeah.
me, Raphael, any of the 2 Degrees team? Any troubles? Be sure to open up a ticket. We're definitely here to help you guys out. So, just
Yeah.
making that
If
aware.
someone has some question right now before we start, we can answer, and if not, we can start soon. Let's see. Yeah, I guess we can start now. So you guys can see my screen. Is all good? You listen to me?
Yep,
Okay.
absolutely.
So let's start. Let me do one thing here. Great. So to start, I'd like to talk about something that I already talked before, but this is especially on the very higher time frame. Today I'm going to talk about the quarterly time frame. That's the 3 months chart, because I was talking to some people before, and I told them why I changed my bias since from last Friday to bullish again, because initially last week I was very bearish on Nasdaq, but I was looking to the 3 month time frame, so that's the quarterly chart. So initially I just measured the full range, so it was this, and looking overall, we are very bullish on Nasdaq. So since October 2022, we would just have like higher price, and I was looking to the three month chart. Here we cannot see things so clear because it's just two candles to show like 3 months here and three here. So this candle was our last quarter, starts on October 1st, and this is our current quarter, so starts on January 2nd. But if you look at just to a dealing range, how these levels work, this showing to me that we most likely not going on trading lower. And why? If we drop to the monthly time frame, here we can see a little bit more detail. So this is October low. This is the January, the December high. That's the all times high. And if you think about how the price plays between these levels, um, this is February, our last month, and because this close here, um, we probably not gonna see prices trading lower. And why I'm talking about this. Uh, Even we try to think that the new range is from November low, because that was the candle that break this high, so and this high. So if we update our range from here to here, uh, in February, what price did? He traded lower, take the January low, the trade until the lowest retracement level, it's the 0.886, and the candle closed above this 0.6618. So this is a signature that happens almost every day in the lower time frame, and I'll show you in a few minutes. If we couldn't close below the January low, I guess it's the T Trades has some videos talk about the bias, how you frame your bias depending on the candle close. So that would be the same logic. We traded below the January low, but we never closed below the January low, and price touched this level, and then the candle close inside these two levels. That for me is a very bullish levels or bearish levels if you were seeing the on the other and the upside down. And adding to this, if we take a look at the monthly dealing range, hold on a second, man. This is a if you look at our monthly dealing range, so let me use the replay bar because these levels are updated to March. So if we just take get back for 1 day, so we got February levels. What this is showing to me, so our dealing range high and low, what price it did. Here was in deep premium, we traded back to discount, so below the 50%. We trade up again to deep premium, so we are playing here. When the price was here, I was thinking that we're gonna take the all times high, but as soon as I saw this rejection and also matched to this COT levels and the open seasoning, I'm not talking about this, but just we can see clear this line dropping. But price traded from deep premium, that's the upper quarter, to the lower quarter, that's the deep discount, and that's is Friday candle. So what Friday candle did? We traded below this lower quarter, but the candle closed above. This for me shows that it's another signature, another bullish signature in price. And if we just take off the replay, now we're gonna get the new levels from March. So what most likely to see? We're gonna retrace to the same logic, some Fibonacci bullish levels. So we most likely see a retrace around this zone, and then most likely to push at least to 50% of this level, because if we're gonna trade lower, we need to retrace it to premium again. So we need to trade back or the 50% or the up quarter and take these lows. So what price is doing right now looks okay. We have this low, this high. We need to retrace it to one of these three levels to push up again. And that was I changed my bias on last Friday, because I was talking about some why I changed my bias on last Friday. So now getting back to the lower time frame, I want to talk right now for one thing that I don't know if for me, probably is the best indicator that I ever use. So the fractal consolidation, this is something incredible. Let me see if the setting is correct. Because if you have the fractal consolidation and the 50-minute time frame, you don't need anything else to trade and make like huge amount of points every day. I mean, literally huge. So what I did here, I just mapped some of the framework I was looking. So let me see. Let's start like here. This is a like this one. So when you see a fractal consolidation like this one, you see a bearish one, and if you look into this price, you would do something like this. You expect the price going higher, and it's okay. But if you measure the standard deviation for every fractal consolidation, then you can get like levels that can help you to see if you keep pushing up or you keep pushing lower. So in this case, I measured the fractal consolidation low, high to low, because this consolidation was in the pre-market. So it starts in London until the pre-New York market, and then for standard deviation was your delivery to New York around the 10 a.m. And in this case, if we just measure the opening range these days, probably will be if you catch the short here, you could take your profit out on -4, but the opening range I guess was around here. So this was much more reliable to me when you talk like in a big range. And the other thing that I would talking about is this day here. This day, I guess, yes, was the day that I took the short here and then the long here. And maybe you guys ask me why I measure this one and rely on this and not of these two bearish fractal consolidation. This one could work too. I mean, if you frame a short right after the opening, that works too, because you're gonna get to -4 standard deviation for both levels. But why those levels are not, how can I say, sharp like this one? Why they are not having the same currency of this one? Because if you think about power of three, accumulation, manipulation, and distribution, we need to think this as a starting point. So when I see a consolidation here and the manipulation leg of this one matches, usually is the number 2, because if you think about -1 is our manipulation leg, so we need to add on the Fibonacci levels the number 2. But until 1.5 and 175, that's the maximum number that this one should work. So if in this case we add 1.75 deviation, so 275 total, and match the high here, we most likely to see a 4.5 of this deviation to be our lower low. So in this case, we got this small retrace 10, and later in the day, we started this new order consolidation. So if you're looking for a short here, it's fine. But if you're looking for some retracement levels here, you probably would have some losses, because is more important to me. And the same concept we have like last Friday, and this is staying until right now. Last Friday we have this fractal consolidation, like a big one. So since for 4 p.m. of Thursday until 9:45 of New York the next day a.m. So think about the same logic. We measure the range and we add our manipulation lag. So in this case, the small number should be this one, 1.5, and the higher number 2.75. And you can test 1.5 or 1.75 or 2, like the other way. And when you see that the manipulation level touches the number like this, and maybe missed by 1 point or 2, that's your no-brainer to take along here. Because I have two things that I was watching. I have this fractal consolidation that give me the retrace level. So 2.33 and 2.5 is a retrace level, like this. And this day I changed my bias to bullish because what happened on the price action. So if you have this and this, for me, that's a trade that you can take here, and you can maybe hold it by until the end of day, because right after the lunchtime we have an extra confirmation of this, because we have this another fractal consolidation here. We have this low, so this low took the, let's say, the liquidity that was standing around here. And when you have a week that traded below but never closed, the bodies never closed below this low, or like in this case we never took this low here, this is a bullish signature, because the price didn't have power or strength enough to take this low. And of course we talk about the 15-minute time frame, so sometimes we have like big wicks, but if you drop it to 1 minute to see more details on the price, what we have here, we have this, we can say this order block, and what price did, never trade below 50% of this order block. So it's an extra confirmation or confluence that we're gonna trade in higher. And if you have these levels here, okay, if you take your trade around the after the opening, probably you take your partials here, and you might hold a runner here. Or if you take your trade after the PM session and you have these levels, you can hold your trade by the end of the day. And that was happened. This 4 PM here. So 1.5 of this level and this level. And we talk about, let's say if you frame the trade here, we talk about 400 points. And like the other days too, if you catch this move correctly, that will give you 400 points again for 50. And this day the same, 400 points. So you just need like the 50-minute time frame chart and this indicator, and if you know the logic how to frame each one of these levels that you wanna rely on, that you can trust, then you can like catch a very very good trade. I mean, it happens every day, and that's our price action today. And this is something that I want to talk about, how the price behaves onto these levels, because that's what's happened every day. Sorry. Here, what we can see, and is what happened in the lower time frame. We have these levels, 2.5 and 2.33 is our retrace level. Our first retrace is unto where? 1 and 1.5. So that's your retrace level here. But we have two levels aligned, this one and this one. So initially we went to 2.5 and 2.33 of this measure. That was also the 2 of this measure. So here we're gonna trade to 1 and 1.5 because it's the 2 and 2.33 level. This case is because it's the 2 level. We're gonna trade something around 0 and 1. And in this case, we just touch the -1 zone. And after the day starts, we trade back to now the 2.5 and 2.33 of this level. So we expect at least our first retrace to 1.5 and -1 and 1.5 of this level, so around here. Or sometimes your second level will be between 0 and 1. So that was your retrace, and we push back. But because we touch -3 of this level, we are expecting a retrace to 0 and 1 of this level here. And that's what's happening right now. So if I want to be a little bit more precise, I would do something like this. And then I don't want to see price close below the 0.786. The wicks can trade below, but the bars will close above. That's probably the retrace that I want to see, and pushing price higher. Because I'm gonna show you in a while how this level in the lower time frame, and how sometimes print a model that I have that I call 1-point stop loss model. It's not every day, but almost every day happened today. I was talking to someone earlier, and I called the price action to him what happened live. So having this on the chart, I'm sure will help a lot to get more confidence to hold the trade to higher levels, and to frame, for example, this consolidation usually happen a little bit before the opening. So when you see something like this until 8:30 or 9 or something, then you can like rely that's gonna happen this delivery here, or like happen this one here. The consolidation starts on London, but the manipulation happened a little bit before New York, so around 9 a.m. So that's another confluence to me that these levels is gonna happen with a high level of accuracy. So let me get to 1 minute time frame to show how this happen every day. So yeah. So let me edit this. So that's our opening range. We could measure the range to know some levels, and because we can add the manipulation level is the 2. So as you can see here, that's our opening range. That's our opening range. The manipulation is here. We have like 2-3 weeks that trade above, but we never close above this level. So this is a bearish signature to me, because we never close above the 2, and price just swept these highs but never close above. So if we frame this trade, you could take the short here and take partials on the opening range level. But to be more accurate, you need to do like this, because it's not a doji candle. So rejection block, high and low to the next opposite color candle, and then we got our 2.5 rejection, because the price never closed below this level here. Price try 1, 2, 3, 4, 5, 6, 7, 8, 10 times closing below the 2.5, but never did. And also that was a closing range, but it's never closed inside the closing range after this one pass through and reject here and get back. So that was a bullish signature to me for a reversal on New York. So at this time I was using this only lower time frame. I use a different one. this one. So here happened today what I call the 1 point stop loss model. So initially we have this big rejection block. So I have this measure, and this one makes more sense to me because that week was huge. So this week, this measure was the one that I rely on to this price action. And what price did? We touched 4. Sorry, 3.5 and 4. We get on this level, and then we start trading lower. When we have like the big measure like this one, it still has some levels to be reached maybe later in the day or tomorrow, and the other one gives like the full delivery, like this candle here. This most of the times we retrace between, and there's I guess I already have the we're gonna retrace between 0 and 1 of this level. And if we do the same thing that I showed in few minutes ago, you measure this box range between 0 and 1, the same levels. And if you want to be even more precise, you measure between 618 and 0786 level, and that would be your 1 point stop loss, because we can put a limit order here, and a safe stop loss would be below 0.705. That's your 3 ticks stop loss. And I called this trade, I was talking to Alex, he's in the chat here. I was talking to him, and I called this trade ahead to him. When price was trading here, I said it's gonna happen this, and I measure and I show it to him. Not happen every day, but sometimes happen. And you can use like maybe a more safe stop loss, this 1.5 stop loss, and you could aim like some levels above these highs, something like this. That's with the 0.5 point stop loss. There's a 179 risk reward this trade. And this logic that is going to happen almost every day. When we didn't get to 4, the first time we can retrace it to 0 and 1, and then push it back later to see if we can close above. If you got rejected 2 times like this, like actually 3, 1, 2, 3, and then probably we gonna trade lower. And that what happened here, because right now this measure we could close below the 2.5, so we most likely to trade until here or back to the opening range of Friday to test this level one more time to push prices up. Hold on, let me take, because if we look at real quick to this chart here, what makes more sense to me and then aligns with the of my bullish bias, we have a lot of levels here that are unbalanced. So here we just have like sell side price. This range is not balanced. This range is not balanced. This range we have like a little bit of choppy here, but few times this range is not balanced, and so makes more sense to me test this zone again and push prices up this week. And of course, this is the first week of the month. We have the non-farm payroll week, so that would most likely to happen. And because I just showed that order chart, I want to talk about hold on. I want to talk about, let me see here, this one and this one. Here, let me do some of this to get more. These days, if you try to measure the opening range or the closing range, the levels wasn't work fine because we are very bearish. So if you catch this short here, great, that would be our final target. But if you try to catch a reversal here, probably that won't work. And something that I noticed in the price, why these things happen, is because when we don't have like levels balanced like this, to get the correct extension, we need to measure from one open to the other in a row, like if this was just one single range, because in this case we have the opening, we trade lower, we never trade above. So to measure a range that makes sense to me, you need to get two levels, or opening to opening, or opening to close. And like this one, if you measure here, this opening high to this opening low, and that was your low of last week on -4 standard deviation here. And if you choose to measure like this here, this high, this high to some opening or closing low. In this case, we have like two levels together. Is this here? Sorry, yeah, this one. And I can take one more. And then 4.5 standard deviation was your low of Friday, like this. And now using the same logic to frame how far can we trade up. So from this low to this high, our opening and closing. So price get today on 3.5. Same logic on the lower time frame. When you get into 3.5, sometimes we trade it back to 0 and 1, or sometimes to 50% of this initial level. So could be something like this, and also match where the price is getting right now. And balancing this closing range once more, we might trade up again. Anyone has some questions so far? I can read the chat. Let me get back here. Thanks, Josh. Thanks, man. The few tricks behind that. Anyone has some questions so far? It's good. Can we keep going on? My fractal indication set for sure. So on the lower time frame, I like to use what happened here? Sorry, I guess I delete by mistakes, but my fractal consolidation is this one. On the lower time frame, or like on the 1 minute, I like to choose, the only things I change is the time frame to 3 minutes, and then I untoggle the auto option and liquidity pools that I don't use. So that settings is for 1 minute time frame. But to use on the 50-minute time frame, like I was showing the ranges, I set this auto so I don't change anything. I just untoggle this liquidity pools. So on 50-minute time frame, the only thing that changed below the standard settings, I just untoggle this liquidity pool. All the other settings, I let like the standard levels. Let me take off this one. Yeah. Anyone else has some question? You're welcome. You're welcome, Shalom. Thank you, Joe. All right, let's so let's keep on. This one I talk. This one I already talked. This one too. Let me. This one get back to too many lines here. So the next thing that I would like to talk about is something that I still like study a little bit in depth. So I don't want to talk much because I still have to figure out some things about the daily profile. But there's something that we can measure the range of the day, because using like some deviations. So usually on range days, we can figure out like three to 5 or 4 standard deviation to one side, and sometimes 4 and 4 to the other side. So today, the New York low before this first retrace, we get into 4.5 standard deviation of the range, and then we trade back to this zone. I still don't have it clear. For example, when we're gonna have like just a range day or a normal expansion day that this number should make times 2.5. So actually -1 times 2.5. So in this case it would be something around 8 and 9. Sorry. 8 and 9. So probably we're gonna expand into here, because that what makes more sense to the day. When you have a regular day like today. But the one thing that I have clear, and then I can show you, for example, for last Friday was a regular day, so that's the range. And on a regular day, the level that we have the manipulation to one side, so in this case 4.5 was the, let me erase this one, and then $4.5 was the low of New York. And a regular day, we can multiply this number by 3. So between 4 and 4.5 times 3, 12 standard deviation was the high right after the Sunday opening, because on Fridays we have sometimes some delivery on Sunday opening, because we have some sentiment from Friday to finish on Sunday to Monday. That's why many times I don't trade Mondays, because sometimes the levels that I'm looking for is not so clear. So we got this level times 2 on Friday, and that's probably what's going to happen today between 8 and 9. It's a regular push, but the final delivery was -12 on Sunday. But for the high impact news, and this I have like more clear, because are days that they almost are the same every month. So for the last non-farm payroll and for the last CPI, what I can show you is like this. Okay. So this is our last CPI. Let me just turn up this for a second. This is our last CPI. And on the high impact driver news days, we multiply this number times 4. So we got a 4 standard deviation manipulation here, and 4 times 4, 16. That's your low of CPI, high and low. And the same logic we can find on the non-farm payroll day. That's here. So 11 deviation, 11 times 4 is 44. So you could ask me, oh, but on Friday price gets to 30 deviation here. But like I said, some days we have our final delivery of the Friday on Sunday opening. And after the Sunday opening, on the 6 p.m., we got our 44 deviation, because 11 times 4, that's your final delivery here. And then we're gonna push up. So for high impacting news driver, this works like very well. I'm still getting more data and to know in more details how these profiles work, because like this is CPI, this is non-farm payroll, and I guess I have some data from range day here. Let me see. No, it's just for the day. So like
Raphael, you're absolutely on a roll right now. I just need everybody to like chat. Can you just drop a 1 if you're with me right now? Like, I just want to ensure that everyone's basically here and at least seeing what's going on right now. All right, because this is some sorcery, and I have a ton of questions, and I'm sure everybody
yeah,
does
go ahead,
too,
go
and
ahead.
they just want to absorb. But I just want to also kind of understand how far you want to take this right now, because this looks pretty intense. I'm
Yeah.
not gonna be the party pooper whatsoever, but I just want to also like just get everybody I guess cognizant that we're all like, I guess, learning, because this is brand new to me, right? So
Yeah, I mean, this thing I discovered, I would say less than 2 weeks ago. So not last Saturday, the Saturday before. So that's why I'm still figuring out how can I frame the daily profile, because what I noticed in making some back tests, we have like the high impact news days. So it's the manipulation number times 4, and this happened on CPI, PPI, non-farm payroll. So that will be easy to frame. But we have some days, regular days like last Friday. So the manipulation level we can times by 2 or 3. So 2, I mean, if you don't know, if you multiply this number by 2 or 3, 2 will be a safe spot. And even though your safe spot, we talk about 500 points, and the most accurate one, 580 points. But some days that I notice, we just have delivered to the downside. So it's like the expansion happened before the manipulation, because, for example, we push 12 deviations to one side, and in the next day we trade above into 4. So it's like the 4 of the manipulation that's supposed to be times 3 and get the 12 delivery happened before the manipulation, like the things happening inverted way. So this I need to figure out. And some days, especially on Mondays, we have like how can I say range days, like usually in the consolidation days we have the same number of deviations to upside and to the downside. So this I'm still like studying this one, but for me this thing blew my mind, because like last Friday, last Friday was here. So when I saw this number, I entered the long a little bit late, because I was looking to the other chart. So I take my levels here, 1, 2, 3, 4. But when I get back to this chart and price was here, I take a long here without measuring the standard deviation levels here, because I was framing at least this level. So I remember I took a short on summer retrace. It was around here, I guess. So it was a 106 point trade without looking anything else. I mean, I think I measured the standard deviation on the 1 minute, but I wasn't looking to my final target to standard deviation the regular levels. I was looking to 4 and 4.5, and I knew by the end of the day we would get here. But I remember I made it this day. 400 points was this time, so okay, I was done. I was like tired for the whole week. It was a busy week to me. But let's say if you have this info in your chart and you can frame something around here, you can hold on to here. That's 500 points. And on the news day, like let's say non-farm payroll or CPI, that's even more nuts. Let me see. February. Okay, on the non-farm payroll, you didn't get all the deviation because it was on Sunday, but you could get again 500 points, and on CPI the same. CPI happened fast. I mean, it was like in a few minutes, but that was 300 points. So this is something that I still like studying, and that's like very crazy to me. Like it's something to pay more attention. Anyone has some questions? Oh, okay. Yeah, that's great. Thanks. Do you think your text I have a hard talk when you see your thing? I don't know. I'm trying to avoid, and one thing that I yes. Hey guys, I just want to say that's no how can I say non-disclosure, that's non-financial advisor. It's just like for educational purpose. I'm not here to do nothing crazy, but I did something last night, and I can show to anyone. Hold on a second. For a second. What's going on here? Just 1 second. I'm trying to figure out what's going on. Here. There we go. And last night, I was trying to prove my point. I mean, how these levels are very great. That I bought a 50K challenge, and I was looking to pass the evaluation if just one trade, and not like using like heavy leverage. So that was like our retracing to after the Sunday opening, and that matched the levels that I was talking about for the 15-minute, the fractal consolidation on the 15-minute. So I took a trade with 2 contracts, and then I was like selling one and buy after the small retrace to not have like a heavy position. So I was locking profit and still not having much risk. So in just one trade, like here to here, I passed the evaluation. So $3,020 was to get approved in one trade, and not like using size. So I entered 2, took one off, added one more, took one off, added one more, took one off, and took one off. So not crazy, not crazy size, but if you understand how to play between these levels, you can be very, very profitable. That was I was looking to talk about. Uh, Anyone has some questions?
And not financial advice.
No.
He's just showing you his own experience, everybody. So you just understand that. Like, that's extremely important. Like, Raphael's results are nowhere near, a normal result level, just so you guys have to, like, kind of be understanding. He's been looking at the markets for a very long time. And I just want everybody to understand, like, these are not realistic results. Like, Raphael spends a lot of energy in the charts, and you can see basically his whole entire, previous analysis all inside the escape. So it's like, if you don't have, like, basically vision on his channel, like, you should just definitely go ahead and, like, look at that. And he posts all of his own charts.
Yeah.
So I just want everybody to be understanding, like, it took a lot of work for you to be able to show that. And
that's
I just want everyone to understand.
I want to talk to all guys. I mean, it looks like simple, but it's not. I mean, to get the level that I am right now, I mean, it took me last year. By the time I was like pushing harder to studies, I studied from January to August, 10 to 14 hours a day, Monday to Monday, non stop. And after that, I slowed down, but still until, let's say, December last year. So from September to December last year, I was studying 6 to 9 hours a day, non-stop, Monday to Monday. So my point here is, it's not an easy job. It's not easy to trade. But my point, if you focus, if you keep it doing your study, if you still like back testing, one time you will get there. And one thing that I never did, and I don't like, is to compare how long someone becomes profitable or not. Everyone has a pace. Everyone has a different way to study. Sometimes you need to work 6 or 8 hours a day. Some people don't need to work. They have like more time to study. So we don't need to try to compare ourselves to someone else, because sometimes it can be, how can I say, disappointing, because sometimes you trade for 2 years and another people that trade for 1 year and a half has a little bit better results than you. And that for me doesn't say nothing, because sometimes you don't have the same time to study than the other people. So I like this, the speech, the what's this, the neighbor grass is greener, or something like this. So you need to rely on your results. You need to focus on your mistakes. That's what's matter. So one advice that I can tell to everybody here: go journaling every day what you do on your trades. Every day, no matter what. By the end of the day, you take screenshots. You write your mistakes. You write your psychological emotions during the trade, because that's what make you improve and get you to a better levels. Because I can say, if you let's say read a book 10,000 times, the same book, I'm sure that, I don't know, after the 5, 6, or the 7,000 times that you read a book, you know where which sentence will be on each page of this book. That's what's happened in the trade. These things, they repeat and they happen almost every day. So you need to start looking, taking a screenshot, making notes, and get some edge in how these things repeat every day. Like the example that I was talking to, how price behave between the standard deviation levels, is because I saw this same price action happen more than 1,000 times. And I mean, I mean it, more than 1,000 times. I did this same measure. I watched the price when he closed to one every single day. So when I saw some signatures in price, it gets clear to me. But for sure, for the first time that I use the standard deviation, I don't have a clue how does this work, and that's my point here. And then I'm not ashamed to say to everyone, I failed more than 400 evaluations, and that's true. So I failed more than 400 times, and I think about give up many times. I think no, I cannot be a good trader. I'll never be profitable. This is not work to me because I failed many times. But everyone has a pace, and I'm sure the people that don't that never will be profitable is the one that give up on the middle of the path, because the ones that keep pushing, keep focused, learn with their mistakes, I'm sure they will get profitable sooner or later. That's my main point to talk about here. Do you journal on computer computer? My way to journal probably is still today. Probably I take around 30 to 40 screenshots a day on price action or on something that I knew that I saw that's new on my price action. So literally more than 30 to 40 screenshots a day. So after the opening, I take some screenshot and I see how the price behave. After the 10 a.m., after the 10:30, 11 a.m., on the lunchtime, on the PM session, before I start my day, I do some screenshots on the higher time frame, on the 7 hour, on the 1 hour. I look to the dealing range of the 30 minutes, the 1 hour. I mean, I do this a lot. What performance do you use to? It's all a mess. Just my computer, I have like a folder separated by day. So for example, today is March 30, and let's say I took 25 screenshots a day. So I put there, and every Saturday or Sunday on the weekend, I go to every screenshot that I did, and some notes that I wrote there, to watch that price again, to watch that price action again. And for example, sometimes I saw some details on price, and then I put some lamp here or some mark, because that's called my ass for some reason, and then I try to backtest that detail again, I'll say. If I ever use the overnight highs and lows for overall, no, I mean I don't rely to overnight highs and lows. What I look to the price before I start my day, I look to my higher time frame, and I can talk this real quick. I talk in the previous stream, but I can talk again. I have a very mechanical way to frame my bias every day. So as you can guys know, I like to use the 7-hour chart as my higher time frame for bias. So basically what I do, in the 7-hour chart, we have it like 3 candles before the New York Open. So we have 6 p.m. to 1 a.m. The candle covers basically the whole Asia section. The next candle is from 1 a.m. to 8 a.m. So this candle covers basically pre-London and the entire London session. And the last candle is the New York that starts 8 a.m. Until 3 p.m. So covers the New York AM lunch session and most of the PM session. So the simple way and the mechanical way that I have it to frame my bias is, if you have 3 candles that basically covers the entire day, this first candle for me is the accumulation candle. The next candle is the manipulation candle. So if this candle is accumulation, we have the manipulation to the upside. New York will push prices lower. So manipulation, accumulation, manipulation, distribution. This is a bullish candle. New York will be a bearish candle. And this happened last Friday. 6 p.m. candle, accumulation. The London candle, bearish candle. New York, bullish. The day before, same thing. Accumulation London, 1 a.m. bullish candle, New York, bearish. And that's the simple way that I use it to try to frame my bias. Sometimes fail, yeah. Of course, nothing's 100% on trade, but this is a very clear and mechanical approach to me. So when I see these two candles and I drop it to my lower time frame right before the opening, I would be looking for bearish signatures in price, and that's what's happened here. If I have the London candle bullish and I'm looking for lower price in New York, after the opening, when I saw this candle take these highs and never close above the body, never close above these levels here, for me, we're gonna trade in lower, and that was my entry would be around here. And the same logic to the other days. I would like to see, and this is something that I can talk in the other day. There's three time windows that I like to watch price in the New York, and the first time window is 9 to 9:15. So depends how the price behave in the opening in relation to this first time window, 9 to 9:15. The price will show me we trade higher or lower. And also, I don't have this chart, but today at the opening, let me just today at the opening we had these levels here. So I was talking like before at the monthly dealing range. That I like to use on my 1 minute time frame, the 30-minute dealing range. So that's very important to me. Right after the opening, where the price was above the dealing range high. If you are in extremely premium, what's most likely to happen? We're gonna trade lower because we need to trade it to the dealing range low to become deep discount. And because the open is very volatile, these levels are like price play through very fast. But that's something that I looking before the opening. Let's say if I'm my bias was bearish after the before the opening, and imagine these levels here, we are in the dealing range low. I won't take a short because we are in the deep discount. So this is something that I like to look to know where we at in relation to the price. Let's see. Someone else has another question. And yeah, like Josh said, trading is extremely personal. Anyone has a different personality. Some people like to enter and leave the trade quickly, like they have like a more scalper personality. Some people, they are more patient, so they maybe can trade like swing trades that maybe takes like 2-3 days a week to get to the final delivery. I am a little bit more, my personality, I would say I'm more intraday trading. I like to I used to open and close trades like fast, but now I am a little bit more patient to hold my trades for a few hours more. But basically, these few hours more, I want to be done before 11. My patience, I'm a little bit more patient right now, but not to open a trade like 9 a.m. or 9:30 a.m. and hold this trade until 4 p.m. Maybe if my my TPs were hit like before, and I just have a runner, so I let my runner there, and I close my charts, and I'm starting doing some other things, because managing a trade, let's say for 9 a.m. to 4 p.m. no, I don't have this patience. What was the biggest aha moment for blowing? I guess for me, architecture was to learn how to accept a loss, because I'm a very how can I say, I'm a very perfectionist guy. I'm a very competitive guy, and even through the market, I don't want to lose. And because I always try to push as much as I can in every aspect of my life, I I put the same effort to trade. And when I take a loss, and accepting this loss was very difficult to me. So I took a loss, and right away I entered in this in one trade again, some kind of a revenge trade, and took another loss and then tried again. And when you see you are in the tilt mode, and you blow the account. And this is still like the biggest struggle that I'm still having, because you guys can see my way of trade. I like to use a very tight stop loss, 5, 7, 10, 15 points. And having this level of stop loss sometimes is a little bit stressful, because you almost cannot fail, because Nasdaq, after the opening, it runs like 15 points in less than a second. So if you not make everything like almost perfect, like the right measure, the right entry, you get is stop down, and control this anger to accept the loss is still something that I need to improve, because sometimes I have like silly stops, so like silly loss. And I used to like enter the trade right away, but now I zoom out, I double check if I did everything right or wrong. And if I did everything right and it still took the loss, it's just something that should happen. And what I do, I just walk away. I'm going to drink a water. I'm going to play a PlayStation for an hour or two. And then when I'm come down, I get back to the charts, because if I stay there, try to recover this loss, and let's say, because usually I have like good days, I most likely be a very bad day if I try to get this loss back right away. So it's something that I had to, and I'm still trying to improve myself. Shalom, do you also upload this record on your personal channel? Yes, I will. Yes, I will. Yes, Shalom. Yeah. So that's something that I'm still struggling. What I can notice, the most of my losses is because I wanna sometimes rush things. I know there's a framework that sometimes I need to wait some retrace it to some level, and I wanted to anticipate things, and then when I get some small losses because I wasn't patient enough. So nowadays, if I even if I know what the trade would be, if I miss that perfect entry, I'd rather to wait for the next good entry than entering in a trade like 30 or 40 points above or below the of where I supposed to trade. So I prefer to stay out and wait for the next good entry. That's what I do nowadays. What platform do you use to organize? Oh, I read that. And one thing that I like to say, by the end of the day, I'm just a ordinary guy that maybe is good to solve puzzles, because I see the market as a puzzle. We need to try to figure out how to connect small information and small techniques we have to unsolve this puzzle. And that's what's basically this. I'm no better than no one. I'm just like as the same as any other one here. I'm just a regular guy. Sometimes I have bad days. Sometimes my if I have some personal problem that affect my emotions, and I notice that if you have some emotions in how to manage a trade, it can cloud your mind, and then you can get losses. That's it. There's nothing different. How often does Rafael go live? I'm bummed I'm missing because I did two live streams here. That's my third one, and they all recorded. I have there's a link here on the 2Degrees Discord, and also has on my YouTube channel. You can find, I guess, is on. Let me see. Is on external resources, and then the 2Degrees live stream database. They're all the videos are there. I live in New York City, on corner with the 9th Avenue. So yeah, we have like ambulances and cops like passing every 2-3 minutes here. One thing that I know, if you try to rob someone in New York, cops came out of nowhere to bust you. Like 15 cops in 2 minutes to arrest you. That's crazy. Yeah, I live on 42nd and 9, so it's Hell's Kitchen here. It's a few blocks away of the Times Square and few blocks away from the Central Park. So it's very crowded here. It's a lot of traffic. Yeah, Hell's Kitchen is insane here. A lot of rats on the streets. On the night, there are a lot of rats, but it's cool.
All right. I got a lot of questions, but I kind of want to just see how far I want to also take the questions with how much time that we got left, and also everyone that kind of wants to ask their own questions. So
Yeah.
Is there anything that's specifically that we have not talked about yet that someone wants to ask before I maybe ask some questions that would be very insightful for note taking for everybody? Probably.
Yeah, anyone has some question that something that wasn't clear? I can talk about again. All right. five. Yeah, if you watch this video 5 times, you got some insights for sure. Can you explain the thought process when getting wicked out, then get back on the trade right away? Yeah, it depends. Like, say, for example, if I get stopped out, and I double check my measures and I did everything right, I can try it once again. If I double check and I see that I made some wrong measure, that was my fault, and then I try to see if I can frame a good entry again. But if I double check, always correct, and I try once again and I get stopped out again, for me, 2 stops in a row right now is the limit. I just close my charts and I walk away, because if I keep pushing, is that how I can really start the revenge trade and even maybe the till today. So 2 stops, sometimes maybe 3 if it's very tight stops is my maximum limit. After this, one of the 2 things, or I wait for the next session or I wait for the next day. Depends on the price conditions. Do you frame trades when price fits? Depends. I mean, it's not like my basic entry, but many times the price retraces into the 50% of the fractal consolidation. Yes, and that's a good framework if you are on the right direction. I can show here real quick. Usually more on the lower time frame, the 3 minutes fractal consolidation. Sometimes you can see this price section you just mentioned. Let me see if something happened. Like this example. Look, if you're looking, okay, the correct measure would be this fractal consolidation here, because it's the one that's close to the lowest low, to the lowest swing low. But let's say if you measure this one and try to frame a long here, the price retraces close to the 50% of this consolidation. And what I always like to do, I always like to have the range on my chart, because that will tell me if we are in premium, discount, and where the retrace levels that price did. And I always like to see something like this: a retrace until a maximum 0.705, or sometimes a week touch the 0.786 level, and we keep pushing up. And in this case, 50% was the 0.786 level, and price traded to the level above. But let's say, even if in this case we have a retrace around 50% of the consolidation, it still would match a level that for me is fine to keep pushing up, and then would be a nice entry, because if you enter a trade here, your safe stop will be below the consolidation, and your tight stop will be below these lows. Would be a good risk reward. Thanks. Oh, thanks, Project My Hand. Thank you so much. I appreciate it, man. Yeah, like Josh said, to get this 12, 15 stops loss, or sometimes 10 point is stop loss, or whatever, you just can get if you take the risk entry. And I talked about this in the previous live stream. What would be the risk entry? The risk entry is when you take the entry before any change state of delivery, before any order block, before anything. You just figure out how is the maximum that the price can go, and you must have this confidence level, because it's really hard to predict. Like, for example, here it's easy to see that there was a swing high and there was a swing low that perfectly matched the 4 and 4.5 standard deviation of this measure. But this looks not easy, but simple to see, because we have all the price action printed. But if you do like this, if you do something like this, you need to trust that trust when prices do this push here, this level will be respected. So I could take maybe a trade here, and my stop would be below this low. Or after this turtle soup here, I will do this right away, and then I'll take my trade on the 0.705, and with this signature that I know that's a bullish, I could maybe, if I didn't take this entry here, I'll take something here, and my stop loss will be here. So that's the only way to get 90 points is stop loss. Because if you're waiting for the confirmation, like change state of delivery, or a order block, or a breaker, or a fair value gap, you should have to wait at least price confirms that it's gonna move higher. So you need to, for me, a confirmation that's expansion leg and it's not a manipulation leg. If you just don't rely on the 4 and 4.5 standard deviation, pricing must close above a -1. So you need to watch the price here. When price close above, you update your dealing range, because now is our dealing range, and we need to wait a retrace around 618 or 705 level. And if your price get around there, our stop loss should be the safe stop loss, 34 points. A tight stop loss, 16 points. And in this case, if you had limit orders the levels that we expect to have like a even a good a better stop loss ratio, your order would never get filled. So maybe when you see price like playing around the 50% zone and it still looks bullish for you because we never trade below 50%, you could enter the market order here, and your stop loss in this case will be the safe 55 points and a tight stop loss 38 points. So if you wait some confirmation that when price closes above -1, or wait for a change state of deliver, a order block formation, I would say it's almost impossible frame 5 to 10 points stop loss if you wait for this safe entry. On the risky entry, yes, but here you must believe and you must like trust that that was the low and the price start pushing higher now. And if you don't know, or if you didn't backtest well to have some edge, you can like get a lot of losses trying to find the low if you didn't understand if you did the correct measure, if that's that should be some reversal point. There are a lot of factors that you can sometimes see after the candles are printed, but on live price sometimes it's a little bit tough to get. At that point in time or number of candles, I decide to the opening range. You mean the 930 opening King Kong chimp? Yeah, no, for the 930 opening, I just use my fibs after the 930 candle prints. So right after the open, 930 was here. I dropped to the 30 second chart to check the size of the 30 second, and in this case, I guess today was the same size. So after the opening print, so I do this right away. If it pushes up, so and then I see that we never close above the one deviation, I reverse it right away to watch the other price. Yeah, this one. And also I have the indicator on my chart that saved me to look closer. So I just measured this level like right away, and to decide which side the price will take is not the number of candles. It depends on different factors on how price is behaving between previous low, how behave inside the range, where we at on the dealing range. There's a lot of things to watch to if you want to trade the opening right away.
All right. So I got one. Just if you can address this though, Raphael, because I just want to understand. Like, people think that you're superhuman. So Isochroma just put a comment that says that basically that you don't show your losses and stuff like that. So can you just like kind of just address the fact that you still lose?
Of course,
like,
every day I take losses. I mean, because one thing is I share the trades that are like most likely to be the win trades. Let's say if I for example today, let's say I was looking to bullish price, we had the opening and I enter long here. If I enter long here, it looks like a very good trade. So because here to here we have 70 points, and then if you enter just one contract, oh, that's be $1,400, right? But if you don't close the trade right away, 4 minutes later you got a loss. Maybe I can move my stop to break even, but the thing is, when I share a trade like here, is because or I take the trade to the right side and prices keep pushing away, or for example, if I would take a short, let's say, I would take a short, like, let's say I took a short here, and initially I put my stop loss here, right? So that this happened fast, and then I get stopped out Okay, this case would be 29 points. It's not like what I used to do, but imagine that happens in 1 minute. This loss, I haven't shared because what was a loss. But when prices start lower again, and I said, no, now it's fine. I just take this wrong entry, and then I enter again, let's say here, and I put my stop loss here, and then I share my trade, the trade when I see that the price is still going on. But yeah, I have lost every day, every day. Maybe I just didn't have a loss yesterday because I did one trade and was a right one, but that was a exception. Every day, I used to have, let's say, if I take 4 trades, I have at least 1 or 2 losses. I mean, I'm not superhuman. I'm not like I'm not like magic. This happened, and also because I like to trade, like I said, using 10 point stop loss, that increases my chance of small losses even more. If I would trade, like, let's say 60 points stop loss or 80 points, maybe I'll have less losses. But for me, doesn't worth it to take this risk because if I'm wrong one time, I mean, it's too big for me. So I rather to be wrong 3 times with 7 points is stop loss than one time with 50 points. Because if I'm wrong 2 times and I be right just one, my right one, let's say I will trade the opening, my right one will cover, like, let's say 2 or 3 losses that I have here, 10, 15 points. Because I know when I get right, I mean, the 3-4 deviations on the opening, sometimes it's at least it's 8, 70, 80 points. In this number of points can cover my loss. But let's say if hypothetically my 4 standard deviation would be 15 points, and my safe stop loss would be 20. I will never take this trade because I'm seeing the risk is much bigger than my reward. I just take a trade, and let's say I allow it to get like a bigger stop loss, and I'm talking about maybe 25 points. If my target is like something like this, 180, 20, because that makes sense to me. If my risk reward is less than 5, I don't take a trade. For me, doesn't worth the risk. So I always try to frame a trade 8 to 10. That's a very good number. Sometimes we can get like even better, because for me, let's say I missed this entry, and when I saw the price that I have the confidence that we were bearish, the price was, let's say, here. I could even frame something like, okay, maybe above the 50% would be a risk is stop loss, but in my mind, I missed this entry. For me, I'll never take a trade of 1 point stop loss, because I trade like prop firm accounts too. So I can afford myself, let's say if I took 2 minutes, I can afford 1 point using two minutes, because if I make this mistake, I almost, if I don't know, I need to do the math, but probably if I'm not blowing the account, I'll be in a very close. I maybe could take a crazy trade like this if I have like a nice buffer, because that's give me some room to allow this risk. But in my mind, why I would take this risk if I know that maybe around 10 I can catch some kind of a reversal in a better risk reward ratio? Or if I can frame a trade here, maybe on the PM session I can find another good trade. Or if I can frame a good trade today, tomorrow for sure I will look some good reason to get a good trade. I don't need to take this risk if the risk is too big. That's something that I changed, I mean, through the time. In few months ago, I had this FOMO that, I can't lose this trade because this will be my daily profit. I can't like kill here. Sometimes you miss, and you need to accept that, because one thing that I had, and sometimes I still do, if you try to chase price, even if I have the confirmation, now we're gonna trade lower, one of these small retraces here, we'll talk about a retrace of 65 points. So sometimes you frame the trade after this small retrace here because trade lower. This retrace, oh, fine, because if we think about a range, that's something that maybe could happen. Okay, something like this. All right, so this is our range. For example, if we think about a small tight range, and this of course should happen like must happen like something like this. So this, if you're looking for this range, and when you see a retrace about to the bullish levels, looks perfect, and you can enter here, and you put your stop a little bit above this high, or let's say you enter around here on 618, and you put your stop above this highs. So here to here, we talk about 20 points is stop loss, and 3 minutes later, you get is stopped out. And sometimes you get even worse, because sometimes this small retrace you get like, if you try to chase the price, and you get like 20 points is stop loss. So I rather to wait and see what's happening, because one thing that I notice and I understand through the time, to trade the opening, you must think fast and act fast. Sometimes you have 1 or 2 minutes to decide what's going on and take an action, because sometimes you see this and say, oh, okay, now we're going trading lower, and when you see price coming here, and you click on the market order, and sometimes for the slippage you order enter here, and price trade back once, and you take like 1 or 2 minutes, 45 points is stop loss. So for me, if I don't have it clear and how to frame this entry, I rather to wait a little bit later, because sometimes today wasn't like not good. The 10 a.m. was choppy, but many times after 10 a.m. we get like very more clear entries. And if, for example, this one after this retrace, this entry would be much easier for anyone. This entry, why? Because we are still in bullish retraces, and look, we don't have this chop anymore. So price trade lower, gets to our retrace level, and we could frame something like this. The first test, you measure this daily range again, because now we are aiming something right there, and here makes much more sense to me. After you see this, you can put a limit order around here, and your stop loss below this low, something around this. So it's a 20 point, 13 point stop loss, and you can frame, of course, you can measure the standard deviation, but if you not measured some deviations, you can measure the dealing range. And if the price plays between premium and discount and premium, if you frame a trade here, you can aim your bread and butter should be 50% of this level, but you can go to regular retrace levels around the 0618 or 0705 will be your safe target, and still that would be a trade for me is a 100 points trade. And this is very clear because look, we move without choppy, so from 1144 to 8 minutes to 1152, we move 101 points. That's for me is the trade that makes more sense, and you don't get this noise here, this choppy, because the only way to trade conditions like this, like choppy conditions, you must be patient and you must have the correct range. Because if you think that it's a retrace to the higher levels, this should be a bullish price action. A bullish price action, we measure low and high, that's our range. And if we are bullish, I want to see, I want to frame price. If you take this full range below the 618, but if you take the updated range, this one, I will look to price below 688.86 or set a limit order here and stop below this low. That's the only way to trade these choppy prices. Because if you're bullish, you must enter around here for sure before the 07786, and the best interest before 0.886. And if you were bearish on price action like this, you do the opposite. So you would frame a trade on this upper zone 0.86, or for sure above 0.786. So let's say that you got the wrong bias at this time, but you frame a trade above, let's say between 0.786 and 0.8086 level. So you could do like this and frame, let's say, if you take the trade like here, even if you are on the wrong bias because the price was supposed to went up, and you take here 21 points is stop loss, and when this price lag lower, you have two offers: or you take out here and it's still in profit, or if you were framing to lower price, after the price move below, you move your stop loss to break even. And if you were bullish, the same thing, you have to frame the trade on the lowest of the zone, because it's the only way to not get a stop loss. Let's say 50%. Your stop, sorry, opposite. Something around this, between something like this, that was makes sense to me. And why we need to frame this the lower these lower levels here? Because if we think this is a consolidation, at this time we didn't have this big consolidation, but we can simulate like a manually one. If we think this is a consolidation, I like to use like regular prices. So if this is a consolidation, right? This is 50%, this is premium, this is discount. On a consolidation, you only survive on the lower quarter that's deep discount, or in the upper quarter that's deep premium. Why? Because the algorithm knows that's a consolidation, and this is our dealing range for the price. So when the price is very cheap, like below this lower quarter, we just have wicks, because when price come here, people buy. If we just have this dealing range here, I want to buy here and I want to sell here. I want to sell in the most expensive zone, and I want to buy in the most expensive zone. That's why here on the upper quarter we just saw wicks, and here on the lower quarter we basically just saw wicks again. And the bodies, where are the all orders together, they are playing between the equilibrium. So here's cheap, here's expensive, but very cheap or very expensive, we just have wicks. When price touches here, it pushes back again, because there are tons of orders here and tons of orders here. That's the logic that I have when I see a fractal consolidation, or to if I'm try to frame a trade and I saw choppy conditions, that's the only way to trade choppy. My advice is don't trade. Wait, price gets more clearing price action, because the chances you get hurt here, you get loss, is pretty big. Or you must be sharp and patient, because sometimes price is playing here, but you always need to wait below these levels. If you try to frame a trade in this zone, you gonna be smashed in the both sides. If you take a long, you gotta be stopped out and say now we're gonna take a short, and price push again, and you'll be stopped out on the both sides. Any more questions?
So much sauce.
Yeah.
Oh my goodness, you're such a natural. Unbelievable. Drop a heart in the chat, honestly. Like Raphael, an hour and 40 minutes, just giving absolute sauce, just pouring your heart out in here, and I appreciate that a lot, and
Thanks,
it means a lot for me. And I guess obviously you see the love from the community as well. Just a lot of passion in here, and just you can just tell how much experience and hard work and, lack of a better term, just also pain that you went through to be able to find these things. And that's just like very admirable that you come on stage and be able to openly share, so it means a lot.
I appreciate it, bro. I appreciate it. I mean, it's been a good journey. I'm happy, but I can say for sure that wasn't easy, and it's still done. Sometimes people say, "Oh, you go, you do this." Man, that's not easy. That's a lot of. I would say trading is a lot of stressful. I mean, in any day, you not can find like easy trade. Sometimes you can frame like good days, But days like today is extremely difficult to trade because we don't have like a clear price action, and that's I think was the most difficult thing for maybe for me, and I just can say for me, but maybe to the other people. Be patient, I guess, is the most difficult thing in trade because it's boring. Keep watching to a chart like for minutes, an hour, and sometimes you don't have it clear what to do. It's boring. At least for me, I can't stand like an hour looking to this, and if I don't have it clear what's going on, it's frustrating because we're here to try to frame a trade to get profit, and some days things are happening like very nice, like you frame a trade idea and it unfolds like in the very 10-15 minutes. That's awesome. But some days like today, these sharp conditions, so we are here from 10 to basically until the 1 p.m. So from 10 to the lunch session, play on this level. Yeah, it's a good range, but like I said, I say it again. It's easy to understand. Oh, yeah, here was a good long, and I could take it off here after you see all these candles printed. But live trading, when you see the price choppy here, up and that, it's difficult to get like a clear idea if you take a long or if you take a short. Just on this price action, no. You must rely on different levels or different measures. You must have something else to take an decision if you frame a long here or if you frame a short here, because just with this choppy price action, definitely not. It's very difficult. Why we get more accurate level from NEQ and not from MNEQ? Honestly, I don't know. Yes, I noticed that some days candles print a little bit different between micros and minis, and I don't know why. It's supposed to be the same, but I know if it's different assets or how this candles print. Uh, I always like to have my measures on the NQ1. Even sometimes I take trades on MNQ on micros, but all my drawings and my levels are on the NQ chart. But why that happened, I don't know. But because, sometimes I guess the other day, I guess was last Sunday, not the Sunday before, I noticed that the I guess was the closing range between one and other asset was like 2 points difference. So in one asset, price was playing like a little bit above the range, like here. So the wicks came inside the range, but the bodies no. And in the other asset, I'm not sure each one. It was on the micro here. Price was out of the range. So that for me at that time helped because one asset was trading above and the other one was like kind of stuck here. So that showed me to me that we're supposed to trade higher because one of the assets was like 3 or 4 points above this level. But it's not every day, but sometimes it happens. The candle prints in the different number, different way.
All right, so let me ask you one question
Yes,
here
go
because
ahead,
I
bro.
got everybody else's
Yes.
question going through, right? All right, so how do I frame this to start? Because this could be a deep dive, right? Um, most of your analysis is basically being within the third candle of the 7-hour chart, and
Yeah.
basing the entire premise off of that gets refined through more basically time in the chart, so that the moment that the closing range and opening range are basically set from the previous day, you're utilizing that in combination with fractal consolidations to frame a overall direction of where you want to see price head to.
Yeah.
And then the moment that that occurs and you have, let's say, standard deviations that are leading you to a specific target in alignment with the higher time frame bias, you're going on to a 1 minute chart, 3 minute fractal consolidations, also utilizing your own doji strategy to then find the areas where you can get in on a very smaller time frame OTE and or a pre-change of state of delivery through a like reversal through standard deviations, aka the 3.5 or the 4.
Yeah.
And utilizing those limit orders, basically you're allowing yourself one re-entry per stage of that. And according to the previous, let's say conversations that we had about where you like your entries, you're still personally loving the 2.5, 2.33, and then as well as, the 7.86 and the 4 and 3.5.
Yeah.
So that was just a little small recap for everything to set some context for it. So I don't want to get anybody confused, but that was basically just my brain getting through all of the information. So you guys can definitely listen to that breakdown again. So let me get to my actual question. So I know that there's definitely some investigation you still have to do about, let's say, the Raphael, deviations and multiplication and stuff like that. But I think that that's a tremendous amount of sauce. And the only thing that I want to ask, which again, I don't know if this has already been talked about from you on like your own studies, but have you noticed any relationship between previous days, basically multiplier to how the next day extensions can also be further aligned? Because I think I'm really like trying hard not to curse right now. I think you're so freaking close that, it's like almost unbelievable. And your just admiration for being extremely precise is taking you to levels that I personally have not seen in the charts before. I'm very interested to see how we can obviously progress and, get to more levels of, automation and mechanics, because I believe that the higher time frame is really, really close.
Yeah.
So now that lower time frame refinement where you're basically anticipating the higher low of the day and then understanding the opposing side of the range through the specific, multiplier of the manipulation swing is almost spot on to that. If you link those two, then you should be able to have your weekly profile as well.
Yeah.
So if you just fractalize that as well, then we can get pretty crazy with it. But I don't even know if I have a question right now, but I'm just loving the...
What I did like here, but I didn't talk when I was talking about the higher time frame, the 3 months. Let me take up this one and this one. What I noticed when I was looking to the 3 month chart and I dropped to one month, and that was the reason that I'm bullish again. So we know that the week of a candle, especially on the higher time frame, is the manipulation of candle. So our January week is supposed to show us the February delivery. That's what's happened. The week of a previous candle, or like previous month, previous week, previous day, will give you the expansion to the other side and your levels. And same logic that I have on the lower time frame, high and low of January week, and I have the numbers where close to 2.33. That's a retrace reversal level, and we know that if we don't close below 2, that's a reversal, and that's what's happened here on February. So aligned to this gives me my thoughts to be bullish on March. And if I'm bullish, everyone are bullish on in any time frame, what we want to see at the beginning, a manipulation to the wrong side. And what's going to happen right now? We're trading lower. But we're trading lower until where? And then we take a quick look on the 7-hour chart to frame our dealing range. So that's Friday low, today's high, and you tell me where we just retrace now. 0.705 bullish retracement, and we're most likely to see this candle closing above 618, maybe above the 50%. And tomorrow through Friday, I want to see higher prices on Nasdaq. And if we think about this, we can use the same logic on the weekly time frame. Of course, the weekly, we have smaller weeks because we have a lot more trade inside the range. But if we see maybe like this is a doji candle that makes a swing high, and we can think something like this to frame how far can you go. And 4 and 4.5 standard deviation was our low last Friday here. So that's another confirmation to me that now we are bullish on Nasdaq, because price has reached his final delivery here, 50% of 4 and 4.5 standard deviation of this week, because this week makes the highest high, the swing high. So that manipulation is the most important to me through all this price action. It took from December 16 until last week. We talk about 77 days, 2 months and a half to finish this delivery here. But now it's done because we reached this level. And after this, we most likely to see, using the same logic behind, this week is going to show us the price where we're going to trade in the next 1-2 months, whatever. I don't know. What I can say you for sure, not sure because we never sure in trade, but I would say 95% of chances that Nasdaq will get on these 2 levels in the next couple months or next couple weeks or next month, whatever. 22 around 22.8050. And looking to a pattern through just looking 2 weeks, what I see in the pattern here, our biggest let me erase this one. Our biggest retracing levels took the biggest time 4 weeks. 1, 2, 3, 4. We didn't have like more than 4 weeks in a row lower price. But if you think about ranges, I'm talking about 4 weeks and 1,500 points on price. Another 4 weeks, and this one a huge one, 2,600. Probably this was when July, mid of the year. July and August are very bearish moves on Nasdaq. You guys can back test to previous year. So this is very bearish. But right now, our third week, we are on the a range for a retrace, almost 1,900 points. So looking to these signals, we most likely to see maybe later in the day some kind of retrace. And usually Monday and Tuesday we're gonna show us like the manipulation of the week, sometimes Wednesday. So if we look, let's see, I'm bullish for this week. I will pay attention on Monday and Tuesday price. And this week especially, I'm not so I don't trust price action so much because it's non-farming payroll week, and sometimes we see some things that doesn't make much sense, like ranges that like doesn't work, or for example, we know that retraces level used to be on 0.786, and sometimes this week you can see like especially weeks come much lower than they used to be. So it's the week that I not trust much the price, but for next week we should see something more clear, and then I'm very convinced that we're gonna see higher price again, because even talk about on the 7-hour chart, the candles and the bodies of the 7-hour tells the story. This is a rejection block on a fractal consolidation. So for me, this full candle give us the delivery of the next day or something like this, 4 standard deviation. And the London candle many times will give us the New York distribution. So London candle, this is the 3 p.m. New York candle, so 4.5 here, and the same logic to the buy side. This is the 6 p.m. candle. I like to just measure the wick because this is not a doji candle and we're not in a consolidation range. So the wick of the 6 p.m. candle, and that was the high of the day today, 4.5. That was the high before New York. And also, if we measure the candle that makes the low, so New York low, 8 a.m. candle, so that was the lowest low. Just the week price is doing right now what I told before in this live. When it touched the 3 deviation, we're gonna retrace sometimes between 0 and 1, and few times to this lower level. Maybe we just touch this level to trade above. That's what's happening here right now. So we most like to see something around here and then pushing to these levels. And if you try to match the today's price action, this candle was the 6 p.m. candle, and we never get to 1 deviation. But what I can do, I try to predict the New York low. In this case, by AM session, sometimes this candle works fine, because if we take a look on the AM session, and I need to drop to 1 hour time frame to do that, and use the replay. Let's say New York session was here the low, and that's the measure that I just did, and makes sense for me because at this time we are closer to 3. So look, 4.5 standard deviation works perfect here. 4.5 here. That was our lunchtime retrace. And to the PM session, maybe those levels are not valid anymore because they worked by 2 a.m. session, and maybe to PM session we must rely on the London candle, but I won't measure the full candle because it's not a doji, it's a rejection block. So high of the week and body low, and that makes sense for me. If we trade around 3.5 and 4, would be the 50% of this 0 and 1. That's our offset week, and after getting here, we most likely to see higher price. And if we talk about again what the range that I'm let me take off these other ones. I talk about between 8 and 9, right? So take off 8 and 9 is the number that we are getting closer right now. Here, like, yeah, perfect. 50% between 8 and 9 here. So, and another thing is the same that I show you on the higher time frame. Our range is a little bit below the 0786, I guess. Yeah, right here. So for me, if I'm right and we are bullish, probably the low that this candle can go is touch this zone just a week, but the body close inside above this level. Or what happened most of times, we touch this level and now we start trading up, because now we are about to get 3 p.m. usually the rotation of the PM session. So probably 3 to 4 you're gonna see higher price. And we think about the open, high, low, close. I want to see a close it more, the closing of the day closer to the 50% range of the whole day. So open, low, high, and close around this zone here between 618 and 615. Sorry, 618 and 50%. That's what's probably going to happen between 3 and 4 p.m.
A lot of sauce. All right, so let me help out with refining my question, because I think we got lost in another story over there, but not lost in a bad way. It's just there's still so many avenues that we can go with, right?
Yeah.
So my question here is, like, we mapped out the 3.5, and then you did call before the stream basically like got to this point that the multiple that what you wanted to do was right around the 8 to 9.
Yeah.
So my question is like, are we going to look to hold more significance on that due to the economic calendar, or is there a way to also decipher like a relationship between previous days deviations?
Yeah, I mean,
Like,
what I noticed, for example, if we have like the red impact news on a day, uh, that day we will have like like big numbers, like we need to times for the levels, and the next day usually will be like a more range day, and these levels are more they are, how can I say, we don't get like a big expansion. We have like a manipulation usually to the same levels between 3.5, 4, and expansion to the other side sometimes to 6 or to 8. Sometimes make like a range day, the same levels to the both sides. Uh, but for the days that I back tested, uh, I noticed that 1 or 2 days after the red impact news, we had like more range days or like not very strong pushes to any other side. Just on the second week of the month, because we have CPI and PPI on the same week, so that's more strong. But one thing that I noticed, and I rely on that chart that you shared with me few months ago, is the connection between the non-farm payroll and the CPI, because either non-farm payroll pushes the price to the other side, and if the non-farm payroll don't do that on CPI, we're gonna have a change of direction on the price. So let's say in this price action, we most likely to see by Friday on the non-farm payroll. If we start pushing price up, the non-farm payroll will do this move up. If the non-farm payroll keep prices on this bearish move, CPI will do this, because that's what happened like 3 weeks ago. We are in a bearish move at that time. CPI pushed prices up, and then we have last 2 weeks lower price again, and this we can see this on the weekly time frame. So this was the first February of month. So sorry, this one was the first February of month. So non-farm payroll didn't push like strong prices up. Second week of month, this one CPI pushed price very high, but we couldn't take this all times high, and then we got this next 3 bearish weeks. And what I expected for this week is the same logic. Now, because we are in this lower range, we most like to see the non-farm payroll push prices here, and maybe the CPI make a kind of balance. Maybe stop pushing this move up and do some kind of retrace. Usually they have opposite moves. One push pricing lower and the other higher, and vice versa.
all right, guys, it's been 2 hours and 3 minutes of straight sauce. I feel like we can go on all day.
Yeah.
For the interest of time in the recording and Raphael's PC and uploading, we should probably talk about it here, right?
Yeah.
One thing I will say, and I pretty much can definitely say that everyone should be able to agree with this, but like, you're welcome at any point, at any time that you want to stream inside the Discord, and we would be happy to have you on.
Yeah, of course. I mean, I've scheduled at least one time a month or two. See, I can come here and talk some new stuff that I can find on price. But it's always a pleasure to talk to this crowd. I appreciate you guys and all the good things you're talking about me, and I'm really happy to be part of this community. If it wasn't for this community, I'm sure I won't be the guy that I am right now, because I guess Josh remembered that like I guess it was like 1 year ago when I started on this core, and Josh was the first guy that told me some very encouraging words, and I never forget about that. That was very meaning to me. I still remember those words because at this time, and here I'm not ashamed to tell. When I entered in this core, I wasn't really consistent profitable. If I make $200-300 a day from this chart, was a very huge day for me, and I didn't believe on myself. And Josh came to me and said, "You don't know how far can you go. You can imagine how far can you go." And I never forget those words. That means a lot to me. And thanks for you too, and now this awesome people here. I'm really happy to be part of this community. I'm just happy to be thankful and grateful for everything you guys doing to me. It's been a privilege and honor to be part of this team for sure.
I really appreciate those words, Raphael. You're inspiring me to do some more of those 2 degrees talks. Really hits home, and I know you've just been super busy on the back end, providing you guys updates, more community efficiency. We're getting a bunch of different speakers on Livestream, so we're providing as much as we can for you guys, but I do want to provide even more. And with the 2 degrees talks, I know that those are extremely inspiring and very relatable too, because everybody at a specific point in their journey can definitely relate to somebody else. And I know that we all share very, very many commonalities that we probably just overlook.
Yep.
And that's just the truth. So one thing I will say, and just because it means so much and it just has so much weight, is that I will just say the quote again that I told you, and it's just like, you could just do more than you first imagined.
Yeah.
And
I remember this. I mean, that was very, how can I say, inspiring to me, because I can be honest here. I mean, I would never ever imagine that I would be 10% that where I am right now. I mean, I didn't have a clue. Definitely not. But as time goes by, I think things just start happening, and I'm very grateful to this. I said before, I thought to quit countless time. I mean, I can say how many times I thought to quit, that I was thinking that wouldn't work for me. I was trying to do something different, and out of nowhere, I mean, things start to happen, like that aha moments, and that was like how can I say, extra energy, extra gas to keep pushing, because I said, no, maybe I'm still on the right path, and here I am. I mean, by the end of the day, like I said, I'm just a ordinary guy. I'm no better than no one. I would say maybe I'm going to solve a puzzle, and that's it. And I will share with you guys something that maybe 3 or 4 people know about me. I have like a very high IQ. My IQ is 146, so it's a little bit higher of the average. But I don't think that I'm special or I'm better than no one. The only thing that I'm fast to solve problems, and that's the IQ test is done. You have a 60 question, and you have 60 minutes to solve these questions, and as fast you do, and more questions you make correct, define your IQ level. And I remember I did 53 questions of 60 in 32 minutes. So I'm fast, and I'm good to solve puzzles, but I'm no better than no one. A doctor is good, an engineer is good, and I can be better than these guys if I never studied engineer, or if I never go to a medical school. So the way I see the markets, I try to solve a puzzle, and I try to think like as a robot. So what a robot would do, and that's the last thing that I forget to mention before, that how I see the price. If we know the manipulation of a move usually is 2.5 times bigger than the lower than the expansion. Let's say if our manipulation is 36 points, 36 times 2.5, 36 times 2.5 is 90 points. So 90 points must be your delivery, and that's here. 90 points. Maybe I miss like one or two ticks, and this. So I always look into the prices like this. If I push it 30 points here, we must do 2 times bigger to the other side. And you guys can do and backtest if you measure any price lag here, whatever you guys want to do. If you get the manipulation to one side, you get the distribution to the other side, like this. Even like this, if this is our manipulation, 17 points, 17.75 times 2.5 is 44.37. That's your delivery here, 49, 44. That's your delivery. This one, this times 2.5. So that's it. I just want to thank you one time again, everyone, and I'm happy to be here. That's it.
Crushed it, my brother. Absolutely crushed it.
Thank you.
Absolutely crushed it. All right. Well, we're gonna definitely leave it here. Hopefully the recording is all well and fine. And definitely invited back at any time you want, and would love to see you pop in a little bit more. I think that you're well on your way to achieving much more than you ever imagined, and just stay disciplined, operate like the robot, and just it's very inspiring for you to also share a bunch of the love with the community as well. So
Thank you, guys.
just seeing how you can also relate to a lot of different people, and just put yourself in their shoes, like that's not an easy task for a lot of people, and empathy is something that not everyone shares. So it's a very long battle for traders, and definitely if anybody says that they didn't think about giving up at one point, they're definitely lying. So just hearing honestly, like just everything about your story is just very, very inspiring. So we appreciate you also, and until next time, everybody, have a wonderful rest of your day. Please be safe.
Thank you, guys. I
Take it
appreciate
easy.
you all, and I appreciate your times, you guys. Spending here waiting someone talking for about 2 hours. I really appreciate everyone. Thank you so much, people.
We'll see everybody soon. Take it easy, okay, everybody? Bye-bye.
Bye bye.